folks, I don't want to alarm you. And while not all commodities are bad right now, as a matter of fact, there's some commodities that I'm really liking right now, like the gold and others. But there's one asset, which is the energy market, that I am not liking at all. So today's story or today's video is going to be how we should dump foreign energy stocks before it's too late. Now, over the past few years, there's been a major shift in the energy markets. And yes, it started long before anyone even knew what COVID means or what it does. In 2019, oil hit nearly $63 a barrel, but it had been on a long downwards trend since 2014 when it was trading over $100 a barrel. Now it sits around $41 a barrel on a good day. And things aren't getting any better. Global economy slowdown has weakened supply, and the second wave of the pandemic is only increasing uncertainty surrounding the future of traditional energy markets. When you consider that the overall sentiment in the energy market is shifting towards renewable energy, and when you consider that Biden will probably be less friendlier to traditional energy markets than Trump, there's a good reason to believe more downside is possible and is likely if things continue moving in the direction we've seen in recent years. Also, don't forget, there's a huge movement into ESG, environmental, social, and governance investing, which means alternate energy stocks are getting a lot of love, a lot of backers in the markets today, rather than the blue chip energy companies of yesterday. And just to be clear, don't throw out all commodities out of your portfolio. I'm only talking about the energy market. Again, I'm not as bearish on other commodities. I really like the gold market. I think it's a great hedge, and I think gold's going to see a lot of upside in 2021, especially if the US dollar remains stagnant, which I believe will have a strong place in everyone's portfolio. I'm talking about gold right now. So gold is great to reduce risk and volatility, but unfortunately, I don't think traditional energy is going to be the big ticket heading into the next decade. So again, don't think I'm talking about all commodities. I'm only talking about traditional energy. And I'll tell you something else. The current downside in the energy market is not limited to the USA. This is a global issue, and I believe foreign energy stocks will be even weaker than large cap US companies that have plenty of cash in reserve. And that's why today I want to give you 2 foreign energy stocks that you should either eliminate out of your portfolio, carve those suckers out, or if possible, consider shorting these names for profits from the downside. First one is BP. Ticker symbol is BP. BP PLC is the holding company of one of the world's largest petroleum and petrochemical groups. Their main activities are exploration of product of crude oil and natural gas, refining, marketing, and supply and transportation. They do everything. And manufacturing and marketing of petrochemicals. The stock is down 44% over the past year, and 5-year revenue growth is down 22%. That's substantial. Plus, when you consider that the US is a big energy consumer, and with the pandemic ravaging much of the nation, it looks like the demand may be hit hard for another quarter or two, especially since no stimulus plan is going through Congress right now. And with price hitting 52-week lows and dividend only growing 4.27% over the past year, which is not significant, there's a good chance we'll see more downside from the stock, which was once a global pioneer in the oil industry. Next one is Eni. Ticker symbol is E. Eni explores for, produces, refines, transports, and markets natural gas, oil, and produces chemicals. One of Europe's big energy companies, Eni is based in Italy. The company has been adding to its renewable portfolio and also has electricity operation, but its European heritage gives it access into markets that other big US players don't have. It's currently operating in 66 different countries, but in a pandemic, a global footprint doesn't offer the advantage it would in a typical economic downturn. Eni's diversification offers no hedge against lack of demand. The stock is down over 33% year to date, I think 35% now. 5-year return is down over 30%. 5-year revenue growth is down 46%. 5-year earnings growth is down over 24%. Earnings per share versus previous year, you're going to cringe when I tell you, negative 120.41%. This is a dog with fleas. Technically, price action has seen upside in the past month, But the stock is barely trading above the 200-day moving average. And while some investors believe it's bouncing back, I'm getting ready to sell shares around the current level since the main trend is strongly bearish. And I'm expecting price to subside once again in the very, very near term. And I hope it helps. Folks, the next gold boom is in full swing, with big profits flowing to those who know how to play it right. Since March, one trader has seen gains like 253% in 21 days, 585% in 28 days, and even 817% on what some call the Canadian gold. You see, people just like you are collecting triple-digit profits in just a few days or weeks by taking advantage of a stock market anomaly very few people understand. One underground trader who understands how to extract maximum profits from Canadian gold and many other commodities is finally revealing his secret methodology. This explosive rally is still in its early stages, so it's not too late for you to get in. Man, I'm excited about this. Click on the link below to find out how you can take advantage of the home run trades like these. Do it now.